Welcome, everyone, to the Deep Dive. Today, we're really getting into the weeds on the recent market action. We've been digging through the latest reports, and our mission really is just to cut through the noise and give you a clear picture of what's going on and, why it matters. Okay, let's unpack this. So, starting off, we actually saw some immediate good news around July 4th, right? The
Correct.
BSE Sensex closed up. It was plus a 93.42 points, about 0.23%, landing at 83,432.89. And the Nifty 50, it also ended up, plus 55.70 points. That's 0.22% at 25,461.00. So a bit of a positive end there.
Yeah, definitely a positive close, which is always good to see. But what's fascinating here, I think, is the volatility underneath that close. I mean, the Sensex had an intraday swing of around 462 points.
Wow, yeah.
That's quite a bit for one day, and it really shows the underlying caution, even with the gains. Sure, buying in finance, IT, and oil and gas helped pull things up, but it wasn't exactly smooth sailing.
Right, the kind of back and forth always tells a story. So drilling down a bit, who are the main beneficiaries and who got left behind in that session? I saw names like Bajaj Finance, Infosys, ICICI Bank popping up as gainers, HCL Tech, Ultratech Cement, Reliance too. But then you had some pretty big drops on the other side. Trent stood out, down nearly 12%, almost 11.9%. And Tata Steel, Eicher Motors, Tech Mahindra, Maruti Suzuki, they were also in the red.
Exactly. And that pattern, it's a pretty clear example of what we call sector rotation, investors moving their money around. On that day, July 4th, you clearly saw finance and IT making a strong comeback. Maybe investors see them as a bit safer, or perhaps they're betting on good earnings.
Thanks. So.
Meanwhile, sectors like metals and auto, which are more sensitive to the economic cycle, they really took a hit. So it wasn't just the market moving up or down overall, it was this very specific shift between sectors. Connecting this to the bigger picture, it shows active repositioning.
Okay, that helps bring the who. But stepping back again, what were the bigger forces really steering the ship, especially with those choppy movements earlier in the week before Friday's kind of recovery?
Well, there were several key things weighing on sentiment, really creating this volatility. First off, you've got the ongoing U.S.-India trade tensions. Everyone's watching that July 9th deadline very closely. Any hint or rumor there can cause ripples.
Right, that's definitely hanging over the market.
Then there was also the news about SEBI India's market regulator cracking down on James Street, which is a big global trading firm. That kind of regulatory action, it often makes traders a bit nervous, maybe signaling tighter oversight is coming, adds another layer of caution.
Okay, so trade and regulation.
And of course, you always have global cues. What's happening in the U.S. markets, liquidity trends there, investor confidence globally. It all feeds in. These external pressures combined with the domestic regulatory stuff, well, it just amps up the volatility we've been seeing.
Yeah, it really sounds like a complex mix right now.
Yeah.
So we had the weekend providing a bit of a breather. What are market watchers kind of bracing for or looking out for in the week ahead?
Okay, so looking forward, next week is pretty critical. There are a few key dates and events lined up. Monday, July 7th, markets reopen. Traders will be watching for any weekend news on tariffs, any updates on upcoming IPOs, and just the general global tone.
Right, setting the stage.
Then Tuesday, July 9th, that's the big one, the outcome on the U.S.-India tariffs. That decision could really set the direction for a lot of sectors, a major potential turning point.
Definitely one to watch.
Beyond that specific date, domestically, we'll start seeing Q1 earnings trickle in, which will give us a health check on companies. And any signals from the RBI or further actions from SEBI could definitely sway things midterm.
Okay.
And globally. Keep an eye on things like U.S. jobs data, what the Federal Reserve is signaling about interest rates, and how Asian markets open. It all plays a part, which raises an important question, really.
So boiling it all down, what does this actually mean for you, the listener, trying to navigate this?
Yeah.
It seems like understanding these specifics, which sectors are moving and why, those key deadlines like July 9th, the regulatory climate, it's all pretty crucial for getting a handle on market sentiment right now.
Exactly. And I think maybe the final thought to leave you with is just how interconnected everything is. Think about how global trade policy decisions like those potential tariffs and domestic regulatory actions directly impact market performance. And that affects everyone, whether you're a big institution or an individual investor. So maybe mull over this. What kind of ripple effects could we see stemming from that July 9th tariff decision across the economy and maybe even in your own portfolio? It's definitely something to think about.